Now, in a perfect world, and it's nothing to be embarrassed about, a lot of them won't even look at you twice. Have you ever checked your business bank account and felt that stomach drop moment where the numbers are lower than they should be, but you know money is coming? Maybe a client hasn't paid yet. Maybe a big bill just landed at the worst possible time. Maybe it's just a quiet month. Your business is fine, but right now, today, cash is tight. We're talking about working capital loans, what they actually are, how they work, and how they help thousands of small business owners get through exactly that kind of moment. What is working capital? First, let's clear something up. Working capital sounds like a finance textbook term, but it's actually really simple. Working capital is just the money your business needs to keep the lights on day to day. Think paying your staff, covering your rent, buying stock, settling your supplier invoices, the everyday stuff that keeps your business running, not growing, just running. Now, in a perfect world, the money coming in perfectly covers the money going out, but business is rarely that neat. Maybe your clients pay on 60-day invoice terms, but your suppliers want their money in 30 days. You've got a gap. That's a cash flow problem, and it's nothing to be embarrassed about. It doesn't mean your business is in trouble, it just means the timing is off. That's exactly where a working capital loan comes in. So, what is a working capital loan? A working capital loan is a short to medium term funding designed specifically to cover those day-to-day operational costs, to bridge the gap when cash is tight. It's not for buying a building, it's not for a 10-year growth plan, it's for right now, it's for keeping things moving. Here's a real example. Say you run a small production company, you just got a great brief from a big client, but there's a 6-week gap between doing the work and getting paid. Your team still needs their wages. Your software subscriptions still need paying. You can't just pause the business while you wait. A working capital loan gives you the cash to keep going, so you can actually deliver the job that's going to pay you. And here's what's important. This isn't a sign of failure. This is smart business management. So what can you actually use a working capital loan for? Honestly, a lot of things. Covering wages during a slow period or a big project. Buying stock before a seasonal rush. Think retail before Christmas or hospitality before summer. Bridging invoice gaps when clients are slow to pay. Paying a tax bill that crept up on you, hiring new staff, or covering recruitment costs for growth. New equipment to take on bigger contracts, marketing to get in front of new customers. Basically, if it's a real business cost and you need the cash sooner than it's coming in, a working capital loan can help. Is it right for you? Now, I want to be real with you for a second. If you're watching this because you're genuinely worried about your business finances, maybe you've had a tougher quarter, maybe a big client just paid late and things are looking tight. I hear you, and I want you to know that reaching out for help early is always the smarter move, not when it's a crisis. A working capital loan isn't a magic fix for a fundamentally broken business model, but if your business is sound and you're just dealing with the very normal, very frustrating problem of cash timing, it can be genuinely transformative. The key things to think about: can you realistically make the repayments? Do you have at least 6 months of trading history? Is your monthly turnover enough to service a loan? As a guide, at Fleximize, we can lend up to 4 times your monthly revenue. If the answers are yes, it's absolutely worth exploring. What to look for in a lender. Not all lenders are created equal, and this bit matters. Traditional banks can be slow. Really slow. And if your credit history isn't spotless, a lot of them won't even look at you twice. That's why a lot of small business owners are turning to alternative lenders, companies that actually understand how SMEs work. One option worth knowing about is Fleximize. That's us, actually. We're a UK-based business lender that specialises in exactly this kind of funding. We can lend between £10,000 and £1 million. You can be approved in as little as 24 hours, and we've built in features specifically for small businesses. Things like repayment holidays if you hit a rough patch, the ability to top up your loan if you need more, and our penalty-free promise, meaning if you pay early, you pay less. No nasty surprises. A real person looks at your application as well as tech, because we know a one-off difficult month doesn't tell the full story of your business. We're not saying we're right for everyone, but if what we've described today sounds relevant to where your business is right now, it's worth checking us out. The link's in the description. So to bring it all together, working capital loans exist for one reason: to make sure cash flow problems don't kill good businesses. They're not complicated, they're not shameful, they're just a tool. And like any tool, they're most useful when you know what they're for and when to reach for them. If you found this helpful, give it a like. It genuinely helps more business owners find this kind of content. If you've got questions about working capital, cash flow, or anything else about small business finance, drop them in the comments. We'll see you in the next one.